I would like to welcome everyone to today's webinar, Payroll Protection Plan, Forgiveness and Funding. This webinar is brought to you by Renewed, the open network for specialized subscription, membership, and event professionals. My name is Stephanie Williford, and I'll be your moderator for today's event. During today's presentation, everyone will be on mute. If you're unable to see or hear, you can send me a private message through chat and Zoom, or if you have any other technical issues or questions. If you have questions for today's speaker, you can submit them at the end of the presentation when we have the live Q&A using the chat. After the presentation, you'll have access to the slides, the recording, Spidel's PPP Forgiveness calculator, some resources on applying, and some other useful links. All of that will be on the renewed.net/resources website, and you'll also get an email within the next couple of days once it's posted. So on today's session, our first speaker today is Lynn Freer. She's president and publisher of Spidel Publishing. Spidel provides webinars to over 20,000 CPAs, enrolled agents, attorneys, and tax preparers in California and now 42 other states. Lynn owned and operated an upscale tax practice for 20 years. And for the past 20 years, she's been owner and president of Spidel Publishing.
Hey, I appreciate you inviting us to do this, Stephanie. And I also appreciate all the work you all have put into getting Renewed up and going. And it's a great resource. I really think that. So anyway, we're going to do an update, talk about new benefits and asking for forgiveness. So just to kind of get us started. Oops. Okay, here we go. So we had 5 separate acts dealing with the PPP. We had the CARES Act, which in addition to that, to the PPP program, did a lot of other tax changes and a lot of other tax benefits. Then we had the PPP HCE, which was the Payroll Protection Program Healthcare Enhancement Act. And then we had the PPP FA, which was the EA, the extended deadline, and the ACRRA, which was the Stimulus Payments Act. We also had 2 other bills, the FFCRA, which was the Families First Coronavirus Relief Act, that was back early on. And then we had the TCDTRA, which we call the Can I Buy a Vowel Act. And our people are just freaks. They love acronyms. And so we had a no acronym year was suggested for this year, but unfortunately that didn't come about. So one of the things, I know Bob is going to talk about this, so I'm not going to go over it, but there are second draw loans. So if you had a loan originally, you can get more money. If you didn't have a loan, if you did have a loan, you can get more money based on the changes in the law. So some of the information on how to actually compute your forgiveness is the question we've had has to do with self-employed borrowers. So if you're self-employed, the maximum amount that you could borrow and that can be forgiven is based on the 2019 Schedule C. So you divide the net profit, but not more than 100,000 by 12 and multiply it by 2.5. So that would be the maximum amount that you can have forgiven, and it basically everybody's going to qualify. Now, on the other hand, if you also have employees, then the employee costs, where you were able to get that as part of your PPP forgiveness, that is going to be coming from the 941s, the quarterly payroll tax reports. If you had a married couple owning a business, only one loan. If they each have their own business, they could each qualify for their own separate loans. So what we're going to look at for the forgiveness is going to be, first of all, payroll. That's the primary item that can be forgiven, and you can only have, you can't have less than 60% in payroll. So if, say, I had 50,000 in payroll expenses, but a total of 100,000, then I would not get to claim all the other expenses. I would have to gross it up so that I would only get 60% of whatever the exclusion is as payroll. So it's your payroll, your mortgage interest, rent, and utilities. And those were originally the only things that you were allowed to deduct. But as we've gone on, we've had a lot of changes, not only legislatively, but with the IRS and the SBA changing things and clarifying. So the FFCRA expanded, this is the most recent bill, and it expanded the eligible expenses. So there's certain operational expenditures that you can add in, property damage cost. And by the way, the property damage cost is that there was a provision in the bill for disaster relief. So if I had say I had a flood, a fire, whatever, that was declared a federal disaster, then I have special treatment on the disaster along with my PPP forgiveness, which is separate from, but along with the PPP forgiveness. I can also include supplier costs, and this for restaurants, for example, big cost in suppliers, particularly in light of the fact that restaurants would say, okay, you can open on this day. They'd order all this food and all this alcohol. I have a friend who has a bar, and he actually lost many, many kegs of beer because between the time he ordered it and the time it arrived, the government had shut it down again. So that will be part of your forgiven cost. Worker protection expenditures and business software, cloud community for operations, product or service delivery, processing payroll. So your payroll costs, paychecks or whoever used to process payroll, that is an includable and forgivable expense. So we also had the EIDL grants. That was the $1,000 per employee. And originally you had to reduce the amount of your forgiveness by the EIDL grants. That is no longer the case. So, and this was under the most recent act. So if you did get that $1,000 per employee grant, you don't need to reduce your forgiveness. Now, if you've already requested forgiveness, then the SBA is directed to make the borrowers whole. So I would assume that that means that they would simply refund that or forgive that additional amount of money. Maybe Bob might have more insight into that, but one of the things that we've been telling people, and I don't know how Bob feels for the banks, but we've been telling people don't request forgiveness until you have to, because we have so many unknowns, and every time something changes, we think it's better to wait. So the covered period, and that's the period that you're going to look at the expenses and determine which of those expenses are going to be forgiven. And it begins the date the loan is funded. And under the most recent law, it's 8 to 24 months after the beginning of the date was funded. So you pick 8 to 24 weeks, and the borrower makes that election, and it applies both to new and old loans.
Lynn, real quick, I just want to let you know that yes, I agree with you. Defer on the forgiveness. I agree with you on that. Second thing, SBA announced this morning that anybody that had idle advance of $10,000 withheld, it will be paid back automatically to the bank plus interest, and the bank will forward that to your clients.
Oh, good. Thanks, Bob.
That came out this morning.
And I didn't start reading it yet, so thank you.
I know. Trust me, I only have 1,000 pages here. Go ahead.
Yeah, I know. Yeah, I love the 5,000-page bill, don't you? That's awesome. Yeah. Okay. So the payroll costs. Payroll includes wages, tips, vacation, and sick pay. However, it does not include the sick pay that that was under the Families First. Actually, when that first came out, I couldn't stop calling it the First Families Coronavirus Act. And I kept thinking, no, that's not right. Don't say it that way. But the First Families Act, under that, you can't include the sick pay that you're getting compensated for under the Sick and Family Leave Acts, or portions of the acts. You can also include health care and retirement benefits. However, not a 5% owner. So when we first took out our loan, we had health care and for one of the 5% owners, and we had retirement benefits for 2 5% owners, and those will not be allowed when we when we come up to our forgiveness, we won't be able to take those loans. Also, state and local taxes that are on the employer. So those would be like state disability insurance. It's not the withheld state tax. It would be like state disability insurance or any other state tax, city tax possibly that the company has to pay. We have some cities here that impose a city tax on businesses, so that would be included there. Now, under the most recent act, we actually get to add some more expenses. So for those of us like Spidell, where we included the pension contribution in the initial computation, we'll be able to make it up for the fact that we can now add, for anyone but those 5% owners, group life insurance, disability. Now, this would not be state disability. This would be a company disability plan, and dental and vision. And these new rules apply both to the original loans and to new loans. And it applies to the loan amount and the forgiveness. So, and again, Bob, maybe you know the answer to this. I'm going to throw this at you. But so if I had done what my bank wanted me to do and apply for my forgiveness in December, and it was already, or November, and it had already gone through, do I amend that, or how's that going to work?
How much are we talking about?
Well, let's just pull a number out of the hat and say it's $20,000.
Okay, anything under 150 is going to be viewed as automatically approved by the borrower's certification.
Right. No, but what I mean is, say my forgiveness was 250, but under the new law, the new act, it would have been 270. But I already applied for forgiveness.
The answer to that is that would make sense. The problem that we have is we don't have the final forgiveness applications yet. What you're saying makes sense, and we think that's going to happen, but I cannot point to a specific citation of how that's going to work, because the lenders don't have that yet. But I would tend to say, if you have all that documentation, you will be able to go and amend it, but I can't tell you how to do that yet. Fair enough?
Right. Yeah. Yeah, but tax law is never simple, never fair, and never reasonable.
Which is great for you.
Exactly. Exactly. So the maximum compensation, and you'll get copies of these slides. But the maximum compensation is going to be $15,385 for an 8-week covered period, and $46,154 if you pick the 24-week. So it may be that the 24-week, you pick that, but it could actually give you a smaller amount. It could give you less than the 15 if you had, during that 24-week period, a reduction in employees. And an owner is capped at $20,833. So that would be your Schedule C owner, your corporate shareholder, your partner, and the Schedule C, they're automatically going to qualify for the maximum. They're automatically going to qualify for what they got. And the retirement benefits, this was a big question. We usually make our retirement contribution at the end of the year, or just before you file the tax return. What you do is take that and divide it by 52 and multiply, or by 12 and multiply by 2.5. So you get 2.5 months worth of whatever that total contribution is. Now, the forgiveness can be reduced. And here, this is part of the Why Lynn Freer's Doing Well Act. Forgiveness is reduced if you have a reduction in full-time employee equivalents, or if we have a reduction in salaries or wages. So these computations could get very, very difficult. I think that the PPP application will help you to compute it, but it's not just an easy task. But the reduction in full-time employee equivalents, if it's reduced in the same percentage as the reduction in the equivalents. So if I reduce my full-time equivalents by 5%, then my forgiveness is going to also be reduced by the 5%. And you look at the number of employees in the covered period, that would be during the or the 24-week covered period versus the number in the reference period, which you have two choices. You can pick February 15th to June 30th, 2019, or January 1st to February 29th in 2020. So you pick one of those periods. Again, you're going to figure out which one is going to be the best deal for you. So I'm not going to go through the computation of the full-time employee equivalents because you just want to stab your eyes out when I get done or before I get done. So we look at a 40-hour standard, and that was another big question. Is it 30 hours or 40? Because in a lot of cases, full-time is considered 30 hours. It is a 40-hour week, and you assign 1 hour for employees who work 40 hours. That's easy. And a half hour for employees who work fewer than that. So you can go through the computation, or you can just use the simplified method, which for a business with a lot of employees who are working less than 20 hours or 20 hours or less, the simplified method might be better for them. And we also reduce the exemptions. So if I let somebody go and then I bring them back by December 31st of 2020, or under the new law, I can have up to the end of my forgiveness period to bring them back. So for everyone that you bring back, you get to recompute the forgiveness exemption. So we, for example, we laid off 5 employees, and if we bring one of them back before the end of, or if we had brought someone back before December 31st, then we would be able to not include them in our forgiveness calculation. And in this area, you get into some kind of like crazy stuff, because in reality, the people that we let go, there were 5 of them. One of them had already lawyered up to sue us for something. If we bring anyone back, she was the longest term employee. She's the first one to come back. So we made a decision that we'd rather take the reduced forgiveness than the hassle of going through what we will conceivably have to go through. So, however, if we were to offer someone a job and they say, no, I'm enjoying my unemployment, I'm making more than I did at home, then you don't have to do the reduction. And the business cannot return to the same level of activity. So there's another kind of way around that one, which is not available in the pension area, which I'll speak briefly of later. Now, that's one reduction. The other reduction we have is a reduction in wages. So for any employee who earns $100,000 or less, if I reduce their wages by 25%, then I'm going to have to reduce my forgiveness. So I'm going to compare the annual salary during the covered period to the average between January 1st, 2020 and March 31st, 2020. There is a safe harbor here too. Again, if you resubmit, if you rehire before the end of the date, then you don't have to include that. And again, a good reason not to do the link early. Here are links to the 8 and 24 week worksheet and that we have that you're welcome to access and use. It doesn't. Now there's so many other variables, you're going to have to do it over and over. We just couldn't figure out in a timely manner how to fit all of that into the worksheet, but this will give you a good start. One huge change, employee retention credit. The employee retention credit, you could not claim this credit if you had a PPP loan, and now you can. And it's an important date is January 31st, and that is the due date for the Form 941, the payroll tax form for the IRS. If you want to go back and use these new, much more beneficial rules, that credit is going to show up on your 941. Now, we believe that they'll find a way to extend that date to give people time to go back and figure out what it exactly is. Because before it was a credit of 50% of the wages, but it was $10,000 per employee. So it wasn't really a great deal, but now the credits increased to 70% of wages. So $10,000 cap applies quarterly, not annually. So conceivably you could get, the 40,000 instead of 10,000, and you can still take the PPP loan. And on the loan, you must reduce the loan forgiveness to the extent that you use the wages for the employee retention. And again, you're going to claim that on the fourth quarter's return. Big best change ever is that IRS tried to say, nope, you got to report that income. And the Congress said, no, that's not what we said. That's not what we said. Nice try, but no cigar. So the forgiveness is not taxable income. So this is going to boost the revenue for anyone who claimed a forgiveness and was able to get the forgiveness.
Can I ask you a quick question?
Sure.
What's happening on the state level? Are the states going to try to get tax this
Well,
income?
each state's different. Some of them conform, some of them don't. California, I'll tell you, I seriously doubt will conform. I mean, it's certainly possible, but I seriously doubt it. Our law specifically says you have to pay the tax. It doesn't conform to the old federal law. It's a standalone. So, it's possible. I would certainly file an extension if there's any possibility, on the California side. Here's the one thing that I just found out about, and that is pension plans. If you have a pension plan, and if you have a drop of 20% or more of your participants, the plan is terminated and everybody is fully vested. So my plan, I laid off 5 people. I have 20 people in my plan that are participants. So I've dropped more than 20%, and my plan is potentially going to be terminated unless I do something to bring some people back. So this is a good reason to rehire enough people to be able to get that pension contribution. Oh, I stopped typing there. Get a good pension plan advisor. This is not something you want to do at home. I'm a big advocate of corporate pension plans, and this is somewhere I think you could really get a good benefit for your company. So if you have questions, you can post them in the chat here later, and you can email me at lynn.freer@spidell.com. Like Bob, I get probably 75 emails a day, not counting what goes to our message board, and from people who are my best friends, supposedly. So if you write renewed PPP question in the subject line, and I put an extra E in there, put that in the subject line, I will get back to you and try to get you as good of an answer as I can. So I'd like to thank you and turn it back over to Stephanie.
Thanks so much, Lynn. That was really great. And for all of us non-tax professionals, a lot of information to think about. We appreciate you sharing your expertise on that. So next, I'm going to introduce our second speaker, Bob Coleman. Bob is the founder and publisher at Coleman Publishing, a trade newsletter and website for SBA and small business lenders. He's a nationally recognized expert on small business lending, a prolific keynote speaker and training instructor in the US and EU, and appears regularly and is sourced by Fox Business News, CNN, The Wall Street Journal, Bloomberg, and other major financial news outlets. So Bob's going to go through the new round of PPP funding, and then we will answer questions. So thank you guys who have submitted them already in the chat. Y'all can continue to do that during Bob's presentation, and then we'll open it up in a few minutes to answer your questions. So let me share my screen with Bob's presentation. And
thank you, Stephanie.
Thanks.
Good, thank you. Hopefully I can add Spidell Publishing as part of my list of people who quote me. We'll see.
Yeah.
Okay, I'm gonna go really, really short on this because I wanna leave, I understand we have a hard stop at 12 o'clock or top of the hour, so I wanna leave plenty of time for questions. As Lynn was alluding to, there are a number of different changes. So what I tried to do this morning was break up what the important things are for lenders. Number one, did everyone get, Stephanie, I sent this to you. Did you make this available to everyone? The Small Business Owner's Guide?
I will after the webinar, yes.
Okay, this is it's a 19-page thing. It's from the Senate. It's a very good Q&A. It's for small business owners, and it deals with everything you want to know on PPP. But here are the 10 things. Number one, We have specific guidance on first draw and second draw. We should have all the information you need to know on getting these loans. The first draw is considered the loans that were made available in March of 2020. And if you did not receive one, you are able to get one. The rules apply the same. I know there are a couple of people on this call who are interested in that. And talk about second draw rules. I'm not talking about, this doesn't apply to first draw. First draw was based on, for simplistic analysis, 2.5 times monthly payroll. That's how much your loan is. So go to your 940, multiply it by 2.5. Lynn, there's a lot of number of things you can adjust to it, as Lynn was saying, but for a simple first blush, that the loan is fully forgivable, which means as long as you can fill out the forgiveness, you do not have to pay it back. If you do have to pay it back, it converts to a 1% loan. The secret amount is $150,000. Anything under 150, the lenders simply take your certification that the information is correct, i.e. as you would to the IRS and your tax returns. Over 150, the lender needs to do an analysis. So I know I've talked to a lot of people. I'm eligible for 165, 170. Should I get 149.99? That's your call, but I wouldn't go 149.999. I'd go 145. Because 145, then the lender does not get involved in the analysis, and that helps tremendously. So you're under the first things, 500 employees, and as Lynn said, basically everyone is eligible. Second draw, the key to this is you have to have a reduction in sales. That is now available. That's available as of today. And you need a 25% reduction on comparable quarters, whether it's the first, second, third quarter. The guidance is very clear. It will take your tax returns. You can do it off your internal QuickBooks, et cetera, et cetera. So it's very specific. Again, the lender doesn't care what those numbers are as long as the loan is less than 150. Caveat, SBA do document it because they are doing random audits of this. Let's see, we talked about, yeah, go ahead, Stephanie.
Sorry, you can see the 10 things you need to know worksheet, right? I have the right screen shared.
Yeah. So I'd say opening dates are today. For second draws are Wednesday. The applications are out. They came out this morning, and I think I sent those all to Stephanie, and she can attach those. If not, you can Google them. Just Google PPP first draw app or second draw app, or send me an email. I'll be happy to send you whatever you want to do. This is for my people. Definition community financial institutions are the first four. First available, get the loans. It doesn't matter to you. Go to the next slide, Stephanie. There are the applications. It's Form 2483 and 2483 SD. And again, it's pretty specific. On the first draw, 2.5 times monthly payroll. And that's the amount of the loan. And that loan is fully forgiven. I want to be sure and make sure you understand that what Lynn is talking about, a lot of the calculations, how to document the forgiveness. And the documentation is different than the actual loan amount. The loan amount is based on payroll. However, to support forgiveness, all 60% of the funds have to go through payroll, and there's other things you can do to make that up. Prepare on your forgiveness. The other thing I want to make a real quick thing about, over 150, it has to be signed off by the bank. Over 2 million, it has to be signed off in SBA. And there's strategies on that if you're over $2 million, be careful, be precise. And because those are all will be audited. 150 to 2, as I said, 150 to 2 million will be done by the bank. The problem that you have as borrowers is the banks aren't expert in this stuff. And we've talked a lot about that. I almost advise my people, I don't want the information from my borrower. I want it from CPA. I can rely on that. Technical guidance, my point 6. That's how to apply for these loans. You don't need to know about that. Number 7, next page. We've modified a lot of forms. We talked about the idle advanced deduction, and SBA came out this morning and said, that if you had forgiveness and the 10,000 was deducted, they will send it automatically to the bank with interest. The borrower does not have to do anything. You'll get a check. There's a whole slew of new dates with respect to payment deferrals. If you have an SBA loan, the payments are, I misspoke, they're not deferred, they're actually forgiven. The agency, the taxpayers will make those payments for you. That's very interesting because if you're thinking about traditional financing, the agency will make your loans up to $10,000 for the first period. I don't have the exact dates. We don't have that, as that says there, it's coming soon. And Lynn did a great job of talking about forgiveness. Again, the 150 is a one-pager that we are waiting for. And once we get that, then we can be very specific on what we need to know. Before I forget, please, we're doing a webinar tomorrow. Do you have a slide on that, Stephanie? Did you make one up or?
I didn't put a slide in here, but I'm gonna include the link in the email that I send out tomorrow.
Yeah, we're doing a webinar for our lenders on everything you want to know about PPP. Anybody on this call, you're free to join as my guest. We won't charge you for it, obviously. Understand that it is for the lenders, but it's going to be pretty in depth, and everyone on this call is welcome to join. And with that, I'm going to stop my comments, and it leaves us about 25 minutes for questions. So ask away. If not, I have only about as Lynn said, I only have about 100 questions I could start off with. So let's let's go.
Thank you, Bob. We did get questions coming in, so I'll read them out to you. I'm just going to do them in the order that they came in. So some of these may have gotten covered, but I think just for the sake of completeness and clarity, if you guys could kind of run through a quick answer to those questions would be helpful. And I'll also mention everybody is muted currently, but if one of the speakers asks for clarification, you can unmute yourself and answer their question or clarify so that they can get you the information that you need. So our first question, Susan asked, you had said, Bob, earlier towards Lynn's presentation about the SBA announcement. I think that has since been covered, but anything specifically about the SBA announcement this morning that you want to remind everybody about or reiterate or clarify?
There's still more to come. We should have all the information we need on how to get the first draw PPP loan, which is up to $10 million. Those amounts are still there. You can have up to 500 employees. Second draw, there is a max of 2 million and 300 employees. That's the biggest difference. Plus you have to have that 25% reduction in revenues, and we now know how to calculate that. So that's very specific on how to do that. My advice to you is there's 14 people who said they want to get a second draw. If the loan's under 150, you can do it yourself. Over 150, I would have your CPA prepare a 1 or 2 page analysis and prepare it for a bureaucrat. Don't overcomplicate it. Lynn had a great thing which she can do for the taxes, but I would just simply say, hey, I may have an eligible pool of $200,000 and I can take in healthcare and payroll and pension and this and that. I would just take it right off the 940 and go times 2.5. That's very simple. It won't be questioned. Once you start adding these other things, which are legitimate, don't misunderstand me, they're legitimate, you can do it, but it's just going to be questioned.
Thanks. And I think you've covered this as well, but you mentioned earlier on about auto forgiveness for under $150,000 loans. There is still documentation needed for that.
I apologize if I used that term. That's the wrong term. It's a forgiveness. It's simply a certification by you that you have met all of the requirements for PPP, and those are for loans under 150. It's a 1-page, 1 signature form.
Great, thank you. And Tama asked, I think this was during Bob's presentation, but either can chime in. What do you mean by a step-up basis for S-Corps?
That's Lynn. I'm gonna punt. S-Corp step up.
Tax
question,
Lynn.
sorry, that goes to Lynn.
Lynn, yes.
I can answer that question in 2 notes. No. Okay, so what happens is that because the loan is forgiven, it would seem that it would, reduce your basis for the amount that you didn't get to deduct. But what it's going to be treated as is if it was a tax-free municipal bond interest. So you get to increase your tax basis in the company for the S corp. You get to increase the tax basis by the amount that was forgiven, which ordinarily you would not be able to do. So that's a benefit.
Great, thank you. And how do you calculate payroll if you're a cash business or sole proprietor?
Very.
Are you talking about for the owner?
Yes, for application, it's 2.5 times that Schedule C profit. We're assuming a sole proprietor with no employees.
Right.
So you take your income that is on the Schedule C, divide by 12. So we have a monthly rate, then multiply it by 2.5, and that's the amount of loan that you're available as a sole proprietor. The problem you're going to have is now you have to go and document that. If you're under 150, you're fine. So I think that takes care of 99.9%. But if for some bizarre reason you're a sole proprietor and you're getting a higher loan than 150, there's a whole lot of other issues, and talk to someone else before you do that. Predominantly, you can only do $100,000 calculations instead. But general sole proprietorship, divide by 12, multiply 2.5.
Thanks. And is rent calculated if you work from home? Is full rent for the month or just a portion?
This is Lynn and I would probably disagree. I would say don't touch it. Even though it's eligible, don't touch it, because you're going to have bankers scratching their head. You're going to have SBA scratch their head, and I wouldn't touch it.
I agree. I agree with Bob. I've always said that office in the home is an audit me please deduction, and especially if you're doing it yourself, you'll most likely do it incorrectly.
Yeah.
Because it's not your rent; it's a percentage of your rent, and there's all kinds of other things entailed in it. And so I absolutely agree with Bob.
Yeah, and remember, if you could, let's go back to the sole proprietor. They're working out of their house. Let's assume it's $100,000 profit, divide by 12, 8,000. So multiply it up. So let's say it's $25,000 just that for the loan. The loan amount is based on 25,000. Then when we go to forgiveness, since it's under 150,000, we have all these different things, and you're certifying to the lender that yes, somewhere in all that regulation, I'm covered by the calculation. If you want to be strict, I turn it over to a CPA and have them give you a 1-page concurrence on that. But I would make this as simple as possible.
Thanks. Yeah, I think that's good advice. For the second draw, is it a reduction in sales or a reduction in cash per quarter?
Great question. It is reduction in revenues.
Reduction in revenues. So regardless if you're cash or accrual basis, and Carol, do you want to clarify that question? Or you got the answer you need?
Well, yeah. you can calculate revenue on a cash basis, so that's fine. But what I'm saying is, this is where you need to be careful. Do not, under any circumstance, go into the bank and say, I'm at 15% and I have these deductions in March, but if I move them over to April, then I can show a 25% reduction in sales. Is that legitimate? Once you ask the banker that question, they should, to use the judicial term, recuse themselves and say, I can't touch this because you've represented to me that you're ineligible. That's why that's why on some of these things, unless it's clear cut, I have a restaurant, Lynn's friend runs the bar, Orange County, California, bam. Yeah, that's easy. That's an easy reduction in sales. But I would be careful on saying we have first quarter 19 to 20, we had an 8% reduction. Second quarter, we had a 5% reduction. Oh, third quarter, all of a sudden we had a 33% reduction, even though we didn't close. Why is that? These people aren't stupid. So be careful when you're playing with numbers.
Yeah, something I read, Bob, and I think it may have been one of the things that you sent me, but that they are allowing you to take the total last 12-month period and average it. because you may have months that that are high and months that are low. And I don't know if I misread or misquoting that.
Again, let's see. I don't know. That sounds reasonable because again, the intent is if you've had a true reduction in sales, we want to get money to you to employ people. That's the intent. And if you can prove it, fine. What you say makes sense. I would need to, I have no reason to doubt that. But the regulations, what I've seen on that, they said you could do it on revenues, you can do it on QuickBooks, you can do it on bank statements.
Right.
You can base it on bank statements. This is my bank statement in 2019 for 3 months, and here it is in 2020. No questions. No questions.
Yeah. Yeah, I think the other part is that there are pretty good guidelines for how to compute the wages. How does the period run? But not so much for the other expenses like the mortgage and the rent and all of that. But I would caution also that you can't use accrual in one period and cash in the other.
Yes.
That's not an allowable change in counting method.
Yeah, don't cherry. In other words, if you're cherry picking, if you're trying to shoehorn it, it's not going to work. Just be careful with that. That's what I'm saying.
Yeah, thanks. And if an employee left voluntarily, does that count as a reduction in employee headcount?
No.
What you can do is just send them an email, say, hey, your job's available. Do you want it? And then you document your file that the person never responded to, the person said no. And that's all you have to do. So just go to the extra step.
Good idea.
In other words, you could say, oh, the person, well, how do you know this person won't come back? Well, I sent her an email and she's never responded. So,
even if you haven't that they voluntarily resigned some kind of paperwork from before, you would still go ahead and send out another email saying their job is still available.
Well, I don't.
You probably wouldn't need, if you already have something in writing that they left on their own.
Yeah, the problem is then, according to the spirit of the law, then you need to replace that person with another FTE. That's the problem.
Yeah.
Okay. Lynn and I are in agreement on that. Therefore, if you do that, the person's gone and you don't have to worry about it.
Got it. If a business ended up having an increase in revenue, do they have to pay back the loan? I'm assuming that's from 2020. So you got the loan.
That's an excellent question. And I'm going to punt on that because the answer is for the first round of forgiveness, they were just looking at employees. I'm going to hide behind the veil of, I haven't seen the final documents. I don't know. If I had to hazard a guess, I don't know. Lynn, do you have an opinion?
I don't either. I don't either. I mean, it would sort of seem like if your profit went up and your employees stayed the same, that the question is, did you have a reasonable expectation?
Yeah, but then you can argue, hey, thanks a lot for the loan because that saved my business. I was able to grow.
Yeah.
So I think you're okay, but I'm not gonna. Let's get the final guidance before I make another mistake, as I've been known to make.
Wait, I probably should have started this webinar with a disclaimer. We like ask your accountant and your attorney and your tax professional.
Yeah, I got a $5 million insurance policy. Knock yourself out.
This is our expert opinion.
Yeah, just call it to my insurance company if you don't like it.
But when do you expect the final guidance to be released? So we have it
this week. This week.
So it will be this week.
Well, let me back up. Congress gave them so many days. And I'm not an expert of the days, but it's
before the end of the month.
Yeah, and I definitely before change of administrations. Definitely before next Wednesday.
Great. And so, on the question of if you ended up having a revenue increase, so I know when you and I had talked previously, we did not apply for the initial PPP. But you said we would be eligible for this next round, even though we had an increase in revenue if we keep it in the first draw. So, and we did not have a decline in employees. So I would imagine if we can, that if something similar would be for the first round, even if you did.
Yeah, and just
I'm
go to your
certainly
nine,
not the expert.
go to your 9, multiply it by it's 2.5 times your monthly payroll. So that's, I mean, that make it that's what you're eligible for. And I think you're right on the cusp of that 150. But if you're at 165 and it's all that's based on payroll and you're going to cover it through payroll, and I wouldn't worry about it, just go ahead and because then you have the documentation. Documentation is 940.
Thanks. And for the PPP second draw, do you guys recommend going to your normal bank or a local community bank that's getting early access to the loans?
That's a great question. We don't have an off the record thing, do we? Stay away from the large banks. Stay away from the Main Street banks, community banks. There's a ton of community banks that want to do this. If you send me an email, I will be more than happy to send you a couple of referrals of some great non-bank lenders that'll jump all over it. You do not need to go to your existing bank. If you go to one of the larger banks, I'll leave it at that. You'll be stuck in the black hole of Calcutta.
Yeah, in fact, when we first applied, or when it first passed, I called our bank, and they didn't even know that it had been, the bank manager didn't know anything about it.
PPP.
So then they had some Yahoo call me and basically tell me, little lady, there's nothing on this, when I already had another bank that was willing to do it.
Yeah.
So, and it was a delight to deal with the small bank.
Yeah, the small banks, and the advantage for the bankers, just so everyone understands, is the banks get a fee for putting this package together, and that fee is paid directly from the government. So on a average size deal, the bank's getting $2,500, $3,000, which doesn't sound like a lot, but you multiply that by 1,000, and it takes them 30 minutes worth of work. It's not a bad return.
We've got 8 minutes left and 8 questions, so I'm going to try to fly through these. Do you have any guidance for round 2 PPP for a nonprofit that took round 1 funds?
Great question. I'm sorry, did they do a round 1?
Yes, looks like it.
Their nonprofits are eligible as long as they can show the 25% reduction in revenues.
Thank you. And Rebecca, if you have any follow-up questions on that, and for everybody, I will be sending around Bob and Lynn's contact information so you guys can follow up with them as well. Okay, I'm going to read Wayne's question here. It's long, so hopefully we can get all this. On loan forgiveness, is it based on FTE's proportion, but there's an exclusion if business activity cannot return to same level of activity? If you produce live events and can't return to the same level of activity, does that mean we can argue for full forgiveness even if we haven't retained or brought back all employees?
That is my understanding. Yes. If, particularly if you were a bar or a restaurant and you have forced to close, a gym, hair cosmetology, that kind of thing, if, you could avoid that reduction.
So an events business, because they cannot return to the normal level of activity, can still be forgiven even though they had to lay off employees.
Right.
Okay.
Yeah, I see Wayne. I see Wayne on the call. How you doing, Wayne? I want to make a comment about maybe addressed to him, may not apply, but be careful of affiliations. And what I mean by that is if you have a company which may have, well, the question that came across my desk was, I have a dentist, he owns 16 different locations, but each location has a different incorporation. So he has 16 different numbers. Can he get 16 different loans? And the answer is no, because he controls all 16. So SB is going to view that as one company. And when you add it all together, he has more than 300 employees. So therefore he's ineligible. And by definition, the only time the lender is on the hook for these loans is if they make an ineligible loan that they know about. So the definition of franchise, or definition of affiliation for the SBA is control. Mm-hmm. So even though you have, I have a company where I may only have a 10% shareholder interest, but it's run by my son, and obviously I control it, and then I run by my uncle, especially when we're talking a lot of hotels, a lot of the Indians, they band everything together, which I've never understood what the problem was. It just makes it stronger loans, but that's an aside. So just be careful of affiliations because they're going to bundle that all together. Okay.
Thank you.
Thanks. This question's from Linda. I'm not sure if it's about forgiveness or the new round of funding. So Linda, feel free to unmute yourself and clarify this as needed. But the question is, can you have a reduction for just one quarter and not the others? You only need to use, can you just use one quarter? So maybe Q1 you had a reduction, Q2 you did not.
Yeah, that's fine.
Yeah, so that it's just one quarter. So,
Yeah,
and
that's fine.
again, I know you can't play funny with the books, but for example, in the event industry, I have one client, 'cause I have multiple clients, but one client who was not able to perform a live event and, was only down one quarter year over year. but
That's
that-
reasonable. That makes sense. And I think you're not going to have any issues with that because you can point to, hey, I lost all this
It
revenue.
was a significant amount of money.
Well, yeah. And that's exactly what this is for company. So you're fine.
I'm not sure if you're coming about if they left and moved out of state, if that was related to employees that left or.
Oh, no, that was one, this was actually a client who basically, if you look at the testing period in that beginning of the year, they had already turned in their notice but basically left during that February, time period when you were looking at the employees. They left and gave a voluntary resignation. We closed. We eventually did hire someone but not for that position, but we were not in a position because of the events business and everything going on and not being in the office to train that we didn't rehire, but that person had prior to the pandemic given like an 8-week notice. And so we went a long time with less employees. So
Are you aware of the date, Linda? The February 15th?
I'd have to look it up, but they left right in the middle, like that March.
No, what I'm saying, but
February.
there's a date that you can go by.
Yeah.
So if they left before that date, you're fine. If they left after that date, then you
But
need.
they gave their notice way before that date. So we had no control over them leaving in the middle of our testing period, and they had.
I understand that, but again, that's really look into that carefully. Lynn, do you have
Yeah, I
anything
will.
about that?
Yeah, no, I agree. I think the spirit of the law is that you would have hired someone in their place.
Yeah.
Right.
But in terms of second draw, remember, second draw is only based on revenues, it's not based on employees.
Right.
First draw is employees, second draw is revenues.
And is the second loan limited or the same calculation as the first and is expected that money will run out?
Money's not going to run out.
So then it wouldn't hurt to go to a larger bank if you've got a good relationship and they're a little later opening the portals. Yes, no.
If you have a good relationship with them and if you have a good relationship with them and they know how to spell PPP, that's fine.
Okay, and do you advise doing a second loan if the business is still stalled and you may not be able to repay it, particularly if the rules change again? The first loan for this person.
That's a very interesting question because you have to, now you're getting into ethics and fraud, possibly, and whatever that the lender is instructed they have to act in good faith. If you say it's stalled, if I'm dealing Orange County, California, and I have a restaurant that's still closed, I think I would have no issue saying we're going to reopen at some point in time. So yeah, they're stalled and things look bleak, but let's do it. If the person has no intention of reopening, I would advise my lenders not to touch it.
And how for a sole proprietor, how would you prove payroll? Is that with one of the forms that you mentioned?
That's a great question. And basically, sole proprietor, you go to your Schedule C and you have your net income. So let's make my life simple. Let's call it $120,000. So therefore, you divide by 12. Well, I can't do 120,000. Let's call it 60,000. Divide by 12. So that's 5,000 a month. 5,000 times 2.5. So I'm eligible for a $12,500 loan. That's how you do it.
Okay. And so same thing for rent, go to your Schedule C?
No,
Yes.
however, I want to add to that if you are a Schedule C with employees, you can add to that the employee. So you would take your 12,500 and then you would
Absolutely.
add the employee wages to that. So it'd be two components to that.
Sorry,
situation.
I was the one who asked that. I'm a sole proprietor, just doing a business out of my home and just submitted a Schedule C to get the loan for 2019 income. Do they only need that Schedule C again as proof that that was what I used it for in 2020?
Do you have employees? Do you have employees?
No,
That's all you need then.
That's all you need.
just resubmit the Schedule C that was used to get the loan? Okay, that makes it easy. Thank you.
This is more of a tax question too. If now the new law is allowing you to add in life insurance and health and other insurance, if the employees pay for part of that through payroll deduction, would you have to only?
No, it's only the part you pay.
Okay.
Yeah, it's only the employer part. Yeah.
Ed,
Great. Well, we're right at the top of the hour, and I think we got through all the questions. So thank you so much to our presenters, Bob and Lear. We really appreciate all of your insights, and to everyone who attended and your questions.
who's
We'll be
Lear?
sending out an email within the next.
That's my new name.
Your new name, Lear. I like it, Lear.
Yeah, yeah.
Sorry, I just flew right through that. Lynn Freer and Bob Coleman. Thank
Oh, I
you.
like it. It's the Atlanta.
Yeah.
It's the southern.
I thought it was
Yeah.
a little audio blip there. I was
No, I like it, Lear.
I did get a y'all in there earlier too.
No,
so-
all right. Well, you get a little southern.
Check your emails within the next 2 days.
And you're all welcome to join my webinar. I'm not going to charge you. You're feel free to join that.
I will send a link out to that as well. So thank you guys. Thank you again to our presenters, Lynn and Bob. We appreciate it.
Good to see everyone.
Thank
Take care.
you.